Hi, this is Kirubakaran Rajendran. So welcome to another video with Groww. So have you ever wondered what is the main difference between a successful trader and unsuccessful trader? So even with respect to SEBI's recent report which they have published that less than 11% or 12% of the people are really making money in the markets. Rest 90% of the people are not making money in the markets. So why is it really difficult for most of the traders to succeed in the markets? So that is what we are going to address in today's video. In today's world, consider 20 years before and 20 years now. So for an example, during 1998 or 2000, during those times, if you really wanted to learn about specific trading, you will not find enough resources. Very few people were trading, and even if you wanted to learn something, it is very difficult to learn because you will not find the right books, you will not find the right strategy, you really do not know how to get into the trading world. But now there are ample of resources. So many YouTube videos are there, so many books are there, so many articles are there, and now it is much easier to learn about trading now compared to 20 years before. So in spite of having so many resources, in spite of having access to so many of these things which helps you to learn trading, why very few people are succeeding in the markets? So the answer is not just by learning a trading strategy you can become successful. So all these successful traders out there, they don't have a secret trading strategy. So that is what most of the beginners tend to think, okay, this guy is successful probably because he is having some secret trading strategy which he is not revealing. That is why he is successful. So the moment I learned that no secret trading strategy, I'll also become successful. So most of the traders, their maximum time is spent on finding that secret trading strategy. But is there any specific secret trading strategy available out there? No, not at all. So what happens is, consider you take any kind of successful athlete. Even take an example for a person like Usain Bolt, where he has won multiple Olympics. So when an interviewer asked him what is the real success behind achieving so many success in this Olympic field and being in this athlete field, he said that he used to get up every day, every single day early in the morning, and he used to train hard, not missing even a single day for all these competitions. So in spite of trying so many things, in spite of training for so many hours, but finally when it comes to the competition, it is not only what he has trained so far matters. So he said that more than whatever the training that I've done, it is the kind of right mindset that I need to have at the beginning of the game. So if I don't win, if I don't have the right mindset, and then if I start going for the competition, definitely there is a high chance that I might lose. So whatever the trainings that I did, whatever things that I've learned so far might not be really helpful if I don't have the right mindset at the beginning of the game. So for him, having the right mindset is very crucial. So that is the same for every sport, for every athlete, even in every profession. So trading is not something that only with the right trading strategy you can become successful. You need to have the right trading psychology as well. So if you ask your friends, or if you ask anyone who started trading recently, why you are trading, he said that no, I'm already having a separate job, I just wanted to try it out, and I like this adrenaline rush. Like whenever after I buy a stock, when it moves in my favor, it gives me some kind of high, it gives me it makes me happy. So I really love that action. So most people come into trading for action, not only to make money. They just love that the overall adrenaline rush, the kick that it gives. So whenever they put some money and they see the market is going up and they made some small returns, they go and show that to their friends, they show it to their spouse, telling them, see, I have cracked the markets, I'm able to exactly judge where the market is going to go, which stock is going to go. So basically people look for validation through these kind of actions. But eventually what happens is, most traders do not have a specific trading rule. That is the biggest problem. Why? Because when you don't have a specific trading rule, and then when you start trading, sometimes when the market goes against you, you get into a panic mode. You really do not know where the market is going to go, what to do, whether should you exit all the positions, or should you exit only 50% of your positions, or no, should you cancel the stop loss and wait. So that you might tend to think, okay, last time when I kept the stop loss, market hit my stop loss and went up, so this time let me cancel the stop loss. So you'll cancel the stop loss. Then this time what will happen is, market will keep going against you. So eventually what was supposed to be a 5% loss would have been a 50% loss, because you failed to exit at the right time. So all these things will come into picture only when you do not have your own trading rules. So the next part is, okay, so now I understood the importance of having a trading rules. Now I started creating a trading rules. So once you have trading rules, will you come out of a problem? No, not at all. Because after you have trading rules, it just tells you when to enter, when to exit, how much quantity to buy, everything, right? So in order to become a successful trader, having trading rules is the first stepping stone. The next stepping stone is being disciplined. You need to be very, very disciplined with your trading strategy. So being disciplined, what it means is, whenever your trading system or trading strategy says buy, you just have to buy it. You should not think, okay, the market is in downtrend, I cannot buy, even though the system says. The system might sound stupid, but the market is actually downtrend. So when you bring your own discretion, when you bring your own analysis into a trading rules and then mix it up, you won't get the results. And also, if some say, suppose you're seeing a bearish news in the markets, okay, some news channels telecasting some bad news, then if your trading system gives you buy, then you tend to think, okay, this is contradictory to each other, so let me wait and see. But again, the market might move up. So when it comes to trading rules, you should ignore all the noises and focus only on the process. So as I always say, successful traders always focus on the process. Eventually the profit comes, whereas the amateurs, they always focus on the profits, how much profit I can make in this trade. Whereas the successful traders, what they'll ask is how much I might lose in this trade. So they're always risk averse, so they always know, okay, this is the maximum loss that I might face. Accordingly, they take a trade. Now you know that, okay, having trading rules is important and having a disciplined approach towards your trading rule is important. So how do you develop this discipline? Say, the problem is, these traders who specifically trade on intraday, they tend to think, okay, I have a trading rules, I have to follow this discipline, so let me come into the market at 9 o'clock, leave at 3 o'clock, just follow the trading system with the discipline. So that is not how it works, because all the successful traders are not only disciplined between 9 to 3, they are really disciplined after market hours as well. They are really disciplined with their own lifestyle itself. So they always get up every day at the same time, probably by 5 o'clock or 6 o'clock, whatever their routine. And if they are health conscious, they go for jog, they go for gym, or they do any kind of sports activities, and they exactly eat as per their own calories. So they have their certain regimes. They are so disciplined with their own life. So when you become so disciplined with your own life, and then when you come into trading, the trading becomes much more easier. So most of the people, they find it really hard because they are not disciplined enough in their own life. And then when they come into trading, they really suffer. So you need to create this discipline habit outside of your trading hours. Then when you come and start trading between this 9 to 3, then it becomes much more easier for you. So now we have the trading rules. We know that you have to become disciplined, and in order to become disciplined, you need to have your own good healthy routine outside of your trading hours, so that it can impact your trading life. Now, to create this good discipline approach with your trading, you will need to learn the art of position sizing. You should know how much is too much. So just because of you are having X capital, you shouldn't put all the X capital in one trade. So you need to identify what is the right position sizing rules that I need to follow. Because when you try to trade with the least amount, when you try to trade with the money that you can afford to lose, it gives you a sense of relief. You will not have that panic. So you'll always easily take the trading decision. So you always wonder, like whenever you trade with one lot, you tend to make profits. But whenever you tend to trade with 10 lots or increase it to 50 lots or 60 lots, you tend to lose more money, because even though your analysis is right, you tend to panic because you're not able to handle that fluctuation. So these kind of handling the fluctuations will come only when you're used to that specific trading strategy for a longer period of time. So to get used to the trading strategy for a longer period of time, you need to trade with a very lesser size, like one lot or two lot, for a prolonged period of time. So eventually you will get to understand the MTM fluctuations of the market, how your overall trading system will perform when the market is in uptrend, how it will perform when the market is in sideways or downtrend. So then you are so used to the fluctuation, slowly when you scale up the capital, you would be able to stick to it. So you will not jump systems, or you will not tweak any kind of trading strategies, because you are so used to the trading systems. So this is how you can slowly increase your capital, slowly become disciplined with your trading strategies, and then eventually you can become a successful trader. And most systems traders, they face issues like they would have their own trading systems, everything is fine, but they hate this drawdown part, because people can't handle the drawdown. People are always looking after a specific trading strategy, or search of a trading strategy which can give them regular returns but zero drawdown. So there is nothing as such where there is no such trading system that exists which can give you only profits. Any trading system can give you loss. There will be days that you're going to make profits. There will be days that you can make losses also. So the first and core principle is only when you're ready to accept the loss, you would be able to make profits. If you're not at all ready to accept the loss, if you're always trying to avoid that loss, there is no way you can become a profitable trader. So the chart that you're seeing right now is actually the live performance of a hedge fund manager called Bill Dunn. So he's a very famous US hedge fund manager who has been trading since 1970. So it's almost 50 to 53 years of live track record which he has published in his site. So the blue line that you see is actual fund performance. The red line that you see is the S&P index performance. So the S&P index is similar to our Nifty or Sensex index. So as you could see, his performance, which is the blue line, is really good compared to the red one. So $1,000 which was invested in 1970, 50 years before, in an index fund would have been giving 2.46 lakhs dollars. The same $1,000 which was invested in his fund would be giving almost 1.5 million dollars. So huge difference. But these kind of huge returns he is able to make by handling the drawdowns. So all those arrow marks that you see at the beginning where minus 52, minus 28, minus 43. So all these arrow marks that you see is nothing but the actual drawdown that he has faced. So it's not only a normal retail traders like us, even a guy like Bilden who is managing multi-billion dollars, even he has to go through such kind of drawdowns. But the best part is he is able to stick to the same trading strategy with discipline. So he is not only able to recover from the drawdown every time, he eventually is able to make higher returns in the long term. So this is the secret behind any of the successful trader. So everybody faces a drawdown. So it's all about how you are handling the drawdown and sailing through it. Eventually, makes or break a trader. So this is what I want to convey through this video. So moreover, in case if you wanted to put more efforts to learn more about trading psychology, I would recommend you to read the book by Mark Douglas called Trading in the Zone. So where he has clearly drafted what a specific trader might go through in his life, like what are the pitfalls, what are the hurdles that he might face, and how they could overcome it in detail. And also there are multiple videos out there of speech of Mark Douglas, so I would recommend you to watch that as well. So these things would greatly help you, to become a successful trader. Because as a trader, when I started trading 14 years before, I did not give importance to trading psychology at all, because most of the beginners always think trading strategy is the vital one. Once I crack a trading strategy, I can make huge returns. But once you come into that zone, then you will realize, okay, the actually answer is not the trading strategy. If it is only trading strategy, every single guy out in the world who is having access to internet would be making millions. So it is not the actual trading strategy. It is actually the trading psychology that makes or breaks a trader. So once you start giving importance to trading psychology and then start following any kind of trading rules that suits your mindset, eventually you will become a successful trader. So this is what I really wanted to convey in this video. So thank you so much for your time. I'll see you guys next week with another video. Bye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.